Key pipelines that connect Northern California and Southern California refineries with oil are at the risk of closure. And closure of these pipelines could actually impact the supply of gasoline in California. And this is all with physics, because these pipelines can't operate if they don't have enough oil in them.
When you can't drill new wells and your production declines, then the production is going to decline into the pipeline. Because of the crude that is in the pipelines, our crude is so heavy and so thick, if you don't keep it in turbulent flow and kind of mixing as it goes, it will set up. And we're getting to the point where it's almost out of turbulent flow.
And at a certain point, if the production drops any further, engineering-wise, it's not viable. I mean, the physics won't work. You have to shut it down.
There is a reason why this industry is here. Why is there so much negativity about oil and gas?
This industry is 8%, as I've said, 8% of California GDP, but it's the first 8% of California
exactly
GDP.
Right.
If you don't get the first 8%, you're not getting the other 92.
The state has just passed a law to increase the amount of oil drilling in Kern County. But is it enough? We have been covering the oil industry and gasoline supply in California. And this episode is one of those that will show you how complex the infrastructure is behind the scenes. I'm Siamak Khorrami. Welcome to California Insider. Stan, Michael, it's great to have you on. Welcome.
Well, thank you. It's an honor to be here.
Yeah, it's terrific to be here. Thanks again.
There is a problem with our pipelines in California that most people don't know. Oil pipelines that are coming from Kern and across the state. Stan, can you tell us what's happening with these pipelines?
Well, basically what's happened is because we haven't drilled and haven't CalGEM, the permitting authority for the state to issue permits to drill, have not issued permits. Therefore, when you can't drill new wells and your production declines, then the production is going to decline into the pipeline. So therefore, at this point in time, our production has declined so much that we're in jeopardy of shutting down those pipelines. And Mike, you're a lot more adverse at the numbers than I am, but I know that we're down a huge percentage than we were 10 years ago.
Yeah, today we're probably below 20% of supplying our own internal oil, internally produced oil to California. We're about 20% of that capacity. So we've gone from 94% 30 years ago to less than 20% today, which means we're importing the foreign oil, which then has an impact because since we're not producing in the state, as Stan has brought out, that pipeline's in jeopardy because there's not enough oil in that pipeline and not enough pressure in that pipeline to run the oil to the refineries.
To add to that, like 10 years ago, we were putting about 468,000 barrels in California we were producing in-state production. Today, it's around 200,000, and we're importing 1 million barrels a day of crude from all over the world, from third world countries that have no human rights.
And you guys are both very concerned about these pipelines. Can you tell us what's the impact if these shut down?
Well, first of all, if they shut down, then obviously that's where we make our gas and diesel from. And so what's going to happen is our gas and diesel is going to decline. Then what happens, we're going to try to import gas and diesel to make the shortfall. And again, we've spent millions and millions and millions of dollars upgrading our refineries to run low sulfur, and they call it carbob products, or reformulated fuels. We're going to import that now. And what guarantee do we have that we're going to meet carbob? We're on the verge of something catastrophic here, and we better open our eyes.
In terms of these pipelines, is there a threshold that will cause them to stop? Can you tell us about that?
Because of the crude that is in the pipelines, our crude is so heavy and so thick, if you don't keep it in turbulent flow and kind of mixing as it goes, it will set up. And we're getting to the point where it's almost out of turbulent flow, and they're going to have to shut the pipeline down. Mike, you might know the numbers better than I.
Yeah, you need about 100,000+ barrels going through the pipeline a day. It's going to move at about 4 miles an hour because it's thick, it's heavy oil, and if it's not moving, it's going to set, and then you have a whole different set of problems. But, you know, at a capacity level, you're really looking at probably 20-25% capacity. When it falls below there, it's not economical, and it's further, the engineering doesn't work out. It'll shut down.
So it will stop, the flow will
It'll
stop.
stop the flow.
And then if that stops, what happens?
there's no more fluid to the refineries to make oil and gas.
When you mention these pipelines, and both of you are concerned about this, we are hearing from other experts in the state that these pipelines are critical. They are having not as much flow that they should be having, and they could shut down. Is it a number of pipes that are connecting these wells to refineries?
Well, I'll start from the production field, and then Mike, you can take it over from the production field. When you drive by an oil well and you see these wells, these pump jacks pumping, they have a wellhead, and that wellhead is hooked to a manifold with a whole bunch of other wells, and then it goes into a tank. And then in that particular tank, or particular tanks, many tanks, they do water separations, solid separations, and kind of purify the oil before it goes into the pipeline. And then from those tanks, it goes into the pipeline, and then, Mike, I'll defer to you.
Yeah, it goes into what are called feeder pipelines, and then those feeder pipelines go into a major pipeline, like an artery, if you will, in the human body. And our arteries run basically north and south because
they go from Northern California to Southern
and
California.
to Southern California. And so the oil is collected and put into those pipelines, and it will either flow north or it will flow south, depending on demand and depending on the scheduling and how they're running the pipeline, okay? Now, the key is to have sufficient quantity in the pipeline to make it economically viable and engineeringly viable. And when that pipeline falls below a certain capacity utilization, and that's about 25, 30%, then you're going to have a problem with the economics. And in fact, there are pipeline operators in our state right now that have gone to the governor and have said, look, we're losing money, $20 million a year plus, on the operation of this pipeline because there's not enough oil in it to make it economically viable for us. And at a certain point, if the production drops any further, engineering-wise, it's not viable. I mean, the physics won't work. You have to shut it down. And so this precipitated the discussion in Sacramento, ultimately leading to maybe we should allow 2,000 permits in Kern County to increase the production of oil.
Now, why the volume is down in these pipelines?
When you drill an oil and gas well, they're like any piece of operating equipment. They will wear out after a period of time. It's not necessarily that there's less oil in the reservoir. It's that the equipment, the casing, the pipe, all of these pieces of operating equipment, they get old and you have to drill new wells to supplement.
Even the same reservoir?
Yes, in the same reservoir, to produce more oil and gas to keep up with production. What's happened is we have not received permits from the state authorities, so our production has declined. Since
2019, the number of permits that have been issued for drilling new oil wells is down 97%. It's down to a trickle.
So since 2019, we have had very little amount
virtually
of new
nothing
permits
in terms of developing these fields, rehabilitating these fields, or replacing lost production due to wear, tear, and maintenance, because the permits just simply weren't offered.
So that's why the pressure is down in these pipelines, because there's not enough permits to drill.
Enough fluid.
It's not enough fluid.
Not enough fluid.
And so if the fluid is not there, these pipelines shut down. It looks like there's two reasons this pipeline could shut down. One is the financial side of it, which looks like these companies are losing money. The other side is the physics.
The physics.
How close is it to shutting down?
Razor thin margin right now.
I'm thinking 6 months to 12 months we could be in dire straits.
Razor thin.
And is it multiple pipelines that are in this situation?
There are multiple pipelines, but I think if you think in terms of a major artery, if that shuts down, then all the feeder arteries that are associated with it are no longer operational either. So it'll have a domino effect.
Do you think that these oil fields would stop producing if
they have nowhere to put their crude?
Where are they going to put their crude? The oil is going to come out of the ground. It has to go somewhere, and there's limitations on tank farms. And then after that, if you can't put it into a pipeline to get it to a refinery,
you could truck it, but it's not economical.
If you want to truck it, you're looking at a line of trucks going up the I-5 that is almost indescribable.
Yep.
And there's a couple of refineries you guys mentioned that they don't have marine access.
That's right.
So how would that work? They would shut down if these pipelines are not
Absolutely.
functional?
They have two choices. They shut them down or they truck it in. And if you truck it in, you're looking at a cost of trucking costs for a barrel of oil are 3 to 5 times more than a pipeline.
And these pipelines, on the economical side, why don't they charge more to be financially viable?
It's regulated.
It's regulated through a tariff. Those tariffs are negotiated among 3 parties, the owner of the pipeline, the user of the pipeline, and the state regulatory agencies. That's worked out very well for the last few years. But now with the reduction in production going into that pipeline, the pipeline owner-operator needs a higher tariff, which is going to drive up the price. But what they really need is more production. But now the operating costs have sort of caught up with the tariff rate. So they're looking for an increase in the tariff about 25 to 30 cents a barrel, which will be reflected in the price of gasoline ultimately. But more importantly, we have to get the volume in the pipeline to keep the pipeline alive.
And Stan, you're in the state capitol, you're talking to your colleagues, and you're seeing what's happening. What's going on with this? What are you seeing there?
Well, we just passed 237, and 237 allowed the Kern County EIR to set precedents and get 2,000 permits. That's going to start in January. That's a good thing. There were some offsets from sensitive receptors that was put in the bill that are not good for folks like in Signal Hill, where they have schools and close to the productions, which hurts their production. It did not allow for the CEQA exemption for the other 3 counties. It set a precedence on more strict pipeline guidelines from offshore regulation. So there were some good things, a few good things like the drilling, but the other things kind of inhibited. It's a good start. It'll help, but it's not the final solution.
The way the latest deal was set up, as Stan explained, it's for Kern County. So the fact that 2,000 more permits are going to be allowed in Kern County doesn't necessarily mean that we're going to have the production there. But when you actually look at the numbers between what the state needs, what the refineries need, what the pipelines need, you need more oil than what is being produced in Kern County. You need oil, from Los Angeles County, from Ventura County, from Santa Barbara County.
We were talking offline, and we figured, well, if you got these 2,000 wells drilled in 1 year, that increased our capacity to 400,000 barrels a year. And this is a big if. And you got 200,000 barrels a day, so that's 600,000 barrels. We're still importing. It still does not get us off of imports of crude. But what it would do, it would increase our amount of gasoline and diesel, which would get us off importing gas and diesel, which is a huge first step.
The risk is importing gasoline and diesel fuel. That's a huge risk to the state, and it's a great cost to the consumer because you have the cost of acquiring the gasoline probably from a refinery either in India, Saudi Arabia, or even China or South Korea or Singapore. Okay, now you have to ship it. And gasoline tankers are smaller than oil tankers, so there'll be more tankers on the Pacific. It's about a 42-day transit time for a gasoline tanker to get to Los Angeles. Now that's 42 days, plus or minus a few, of burning bunker fuel. The emissions will absolutely skyrocket. Now, we have to pay for that. Now, that's going to be about 13 to 17 cents a gallon addition at the pump to bring that gasoline in. Once we get it here, if that pipeline goes down, Stan, now you have to put it into either rail cars or tanker trucks to get it to the distribution points.
This is a matter of national security. I'm telling you, this could be catastrophic. I've said before, if you can't get gas to go to the doctor if you have an emergency, if you can't get gas to farm, the price of food's going to go through the roof. I mean, it is overall catastrophic. We are in dire straits, and we need to operate now.
Now we go to Professor Rector, who's been studying the data on this to see what's happening in his perspective. What is this threshold look like? Have you guys looked into some numbers and data?
Yeah, the threshold is about where we are at right now with our domestic production in California, which I believe is somewhere around 250,000 barrels a day.
Can you explain to us what these look like?
There's a main pipeline that comes up to the Bay Area. That one's very much at risk. There are several pipelines that go to Southern California. And what some of the companies have been doing is saying, I'm not going to ship it up to the Bay Area anymore. I'm going to ship it all to my plants in Southern California and keep those going when, say, the Valero refinery shuts down. So this is the real issue. The state recognizes rightly that we need a certain minimum amount of production to keep these pipelines going. And if the pipelines don't keep going, then the refineries won't keep going, and then we'll have a shortage of gasoline in the state. So they said, well, we need a minimum of 250,000 barrels a day of production. How do we do that? And what they've come up with is a solution that is Kern County centric, as I call it. It's basically to make Kern County kind of a separate regulatory area compared to the rest of California. And they're going to try to allow more drilling there. And their projections are that if they do that, that they'll have enough oil to keep the pipelines open. We meaning Professor Mische, myself, and one of my students, Joseph Silvey, who is working on the project, don't believe that's the case. We do not think that increasing production just in Kern County will be enough to keep this 250,000 barrel a day threshold going. So essentially what the graph is it makes some assumptions about future production in different state action scenarios. So it says the first graph is essentially saying what's going to happen if we drill these 2,000 wells in Kern County? What's going to happen to production over the next 20 years? Is it going to stabilize it? And the graph shows that it isn't, that we're decreasing oil production every year, and we're getting further and further away from that 250,000 barrel a day stabilization limit. Then there's another scenario that says, well, what if we did that and we allowed drilling in the Santa Barbara Channel and in the Los Angeles Basin? What do we do? What does that do for production? And when you do that, you actually see that you're pretty close to stabilizing production. But you need both those things in order to get stabilized production.
There's like 2,000 permits that are given to Kern County to do more drilling. So you guys don't think this is enough?
It's not nearly enough. What we're projecting is that 2,000 permits won't even stop continued decline of production in California. What you got to understand about Kern County is that, first of all, it's a fairly expensive place to extract oil because most of it is heavy oil that's recovered by steam flooding. And so your cost and particularly your energy costs are relatively high. And so your break-even price in Kern County is quite a bit higher than it is in places like the Santa Barbara Channel. It's about double. And so attracting capital to Kern County to drill these wells is going to be one issue that people are going to be facing, particularly if crude oil prices continue their decline. Who wants to drill a marginally economic activity? And that doesn't mean that everything in Kern County won't happen, but I'm skeptical that the overall 2,000 wells will be applied for and drilled rapidly, particularly as we go out into year 2 and 3. And that's when we're projecting that production is going to be substantially less than it is right now. The only way that we can see with California production to stabilize production is by also drilling in the Santa Barbara Channel and the LA Basin. There is no other way about it.
For that to happen, what is needed? Does the public need to approve that?
It's very interesting in the Santa Barbara Channel. You know, there's a lawsuit between Sable and the state or the Coastal Commission about trying to get the pipeline approved so that they can start producing again in the Santa Ynez unit. That production will add a substantial amount of oil per day, to California. That will actually do more than the projected production increases in Kern County, just that unit alone, because these wells are highly productive. They produce 10 to 100 times more per day than the wells in Kern County do. So, and they don't require the same kind of steam. So the expenses are much lower, which means they'll invest in these things during a poor economic environment for oil.
Do you have a thought for people that say the state has been trying to discontinue using the fossil fuels and now it's going backwards?
What I would say is no. I think, what we all have to come in with the viewpoint in, or at least maybe most people do, is that there is a transition going on in California. There has been, and there will continue to be. We are moving away from oil, right? Whether that's by 2045, as our objectives are, or whether that's 2065, it's happening. Okay. And so the question during that time is, how do we most effectively transition from where we are now to where we're going to be, whether it's in 45 or 65. And what the state has not done is think that through. Okay. What they did was they essentially shut down or tried to shut down oil production, not recognizing that we still need oil, that our demand has really not dropped very much. We still fly jet airplanes that require liquid petroleum fuels, and it's a lot of gasoline that we need for those things. And so what they're now realizing is that you can't just shut off the oil, you have to taper it down. How you taper it down is now the question. All right. So we all are in agreement that, or a lot of us are, that we want to phase out oil. It's just a question of doing it in the most practical way that's best for the state in terms of not only its economy, but also the state environment. And for example, the opposition to drilling for oil, say from Platform Holly in the Santa Barbara Channel, is completely misguided, because the seep emissions and the oil oozing from the water in the Santa Barbara Channel far exceeds, over the course of a year, the amount of oil saved from a pipeline leak like the Refugio oil spill that shut down. People aren't understanding the physics and the geology of what's really going on in California. And in my view, until they recognize these facts, they're going to make decisions that are actually not only anti the economy of the state and potential put ourselves at risk for much higher gasoline prices, but they're actually damaging the environment in California by opposing oil production there. They're damaging the environment. They're anti-environmentalists, unwittingly.
We saw that Valero, when they announced, their stock price, they announced they're leaving California and their stock price went up. Is there hesitation from investors in this space? And these 2,000 oil permits that are going to come to Kern County, are they going to get done? Are people going to invest here?
So that's the really million-dollar question. We don't know.
We don't know.
We are hoping that they will see some end at the light of the tunnel. And there's also a provision in this bill that allows them to reevaluate for more permits. So at least it's not just 2,000 permits, they're going to reevaluate it. And we have some time to do some more massaging, I think, next year on some of these bills, but I don't know what that looks like yet.
I mean, think about it from an operator's standpoint. Yes, you've got the 2,000 permits, but you have a history of being the most hostile state in the country against oil and gas. You have a state in which our operating costs are about 35% higher to operate a refinery in California than they are across the country. And then finally you have, a pause in the profit penalty tax that was imposed a few years ago. And so you have to ask yourself, if I operate in California, is that the most prudent allocation of my capital? And is that in the best interest of my shareholders? Because they have a fiduciary responsibility to the shareholders, not to you and I living in California.
Mike, that's well said. Do you know, of course, I own several companies. I operate in several states. Texas, Utah, Wyoming. It is so easy to operate. Here, I mean, every time you turn around, there's another regulation on your vehicles. There's another regulation on a tax. There's a supplemental tax. There's the air carb comes out with another. It goes on and on and on. I've thought many times, what am I even doing here? I'm here because it's nice weather. If it wasn't nice weather, I probably wouldn't be here.
Now, you're in Sacramento. You've been there for 6 months.
Yes, sir.
And you've been working with some of your colleagues. What's going on there?
I'm a science guy, so I try to educate through science and fact. It's been receptive to most of my colleagues on the other side of the aisle, with the exception of the politics side, when they're, and I'm talking about the Democratic political side, when they are told to vote on something, they vote on it. They very rarely are able to follow their own thought process. And even though I'm able to convince them, they still will vote the Democratic way no matter what it is. So until we get away from a super minority there, as a Republican, we're going to have serious problems.
Now we go to Skip York, who's an industry expert who's been studying what's happening with these pipelines.
Where we're at now is the San Joaquin Valley is now at the point of where production has dropped enough that with the 2 or 3 pipelines going to the north and the 4 pipelines going to the south, it's now becoming a struggle to keep each of those pipelines full enough to keep them above that minimum flow so that all the pipelines can stay in service. And we're now going to be on the cusp of some of those pipeline operators starting to make decisions about whether or not they shut the pipeline in. And that has implications not only for that pipeline company, but also what happens to that production, because not all production can tie to every pipeline. So you could shut in a pipeline and all of a sudden you would lose production because there's no alternative way for that crude oil to move except through that pipeline, which is now closed. Because most of the crude coming out of the San Joaquin Valley is very heavy, it's very sour. The alternative way to move crude oil, if it's not moving through a pipeline, is either through railroad cars or trucking. But that infrastructure doesn't exist in Kern County, and it'd be difficult to justify making those investments. But even if you did, this crude is very difficult to move by rail or by truck.
How close are these from that threshold?
We think some of the pipelines heading to the north are probably at much greater risk than the pipelines that are heading to the south, really kind of for 2 reasons. We're losing more refining capacity in the San Francisco area with the closure of the Martinez plant that Marathon converted to renewable diesel. Phillips 66 converted the Rodeo plant to renewable diesel. Benicia says that it's going to close Valero says it's going to close its Benicia refinery in March or April of next year. So there's less need for crude to move to the north. And the pipelines are also bigger. So you need more volume to meet that minimum threshold. So the minimum threshold is kind of a percentage of the capacity of the line. You have to fill up so much of the pipe in order for the fluid to keep moving. So that's why the north is at a bit greater risk, because down south, we're in the process of losing Phillips 66 in the Los Angeles area, but we still have other refineries that can pull crude down the valley, out of Kern County, down into the LA area. And there's more lines. There are more lines, and they're smaller diameters. So you've got the minimum throughput of those lines is a lower volume than those pipelines going to the north. So we are probably getting very close to making some very difficult decisions for some of those northbound pipelines. The potential is not all of that crude oil that is currently flowing north would be able to move through the logistics of Kern County and make it to southbound pipelines. So some production could get shut in prematurely because its only evacuation route is northbound. It can't reach the southbound line, so some of that production can get shut in. The other issue that we have is that if we lose a pipeline and we shut in some of that Kern County production, Now we're going to have to replace that Kern County production with more crude oil tankers coming in, and that just contributes to that port congestion issue that we already have in both in the San Francisco area and the Los Angeles area.
Tell us more about these pipelines. They use gravity to flow? How does the...
Well, they'll use a combination of gravity and pressure and pumping. The other thing is that California has, the pipelines in California are a bit unique because if you're in Texas, most of the pipelines move over fairly flat surfaces, and they're also kind of largely they're moving downhill because they're moving towards the Gulf Coast, although it's a very gentle slope. California is much different because you have this undulating geology and geography where, you're having to move crude oil up over mountain ranges, and across valleys. And so the way you do that is you just put in pumping stations along the way so that basically you put pressure at the bottom of a hill and push the crude up the hill. You get it to the top of that hill, and then the crude gravity pulls it down the pipeline, down the next hill. But then when you get to the bottom of the next one, you have to climb another hill. You tend to have to put another compression station down there and put pressure behind that crude oil and push it up the next hill. That's a very unique. That's kind of very unique to California, the undulation. We do see it in Western Canada with some of the pipelines that are on the extreme western part of Canada reaching to reach the Pacific Ocean. But California has a much more difficult geography to run for pipelines than we see in virtually any other part of the United States. But the network's already built. That's the other thing, is that we're not talking about the need to build new pipelines. It's the ability to keep existing pipelines full. So it's a different, it's not a complex problem to solve. It's not an expensive problem. It's not a capital problem for the pipelines. It's an operational problem. And if you give them the volume, they just continue to operate the pipelines as is, and that crude oil can continue to flow.
Before we get to the rest of this interview, let's take a look at some key headlines from the Epoch Times newspaper this week in the California edition. LA County is considering to have eviction moratorium for illegal immigrants who have been raided by the ICE agents. This is something that they did during the pandemic for everyone. There's a new law that lets California have its own vaccine rules. There's a big battle between the Trump administration and California government, and this is another side of it here. California ties with Louisiana on the highest poverty rate states in the country. Now the poverty rate in California is 17.7%, and 7 million people are facing poverty here. This is the data from 2024. At the same time that California economy became the fourth largest economy in the world. We're also hearing of reports that the middle class is shrinking in California. SB 79, which was the housing law that will allow 6-story buildings in single residential family home zones, as long as it was close by a transit station by half-a-mile radius. This law passed the legislature. Now we're waiting for Governor Newsom to see if he will sign it or not. These are just a few headlines in our California section. We have so many more headlines on California, national and international news, especially China news that nobody covers. Subscribe using the link below. You'll get it for $1 a week for the first 4 weeks. And I'm sure you're going to be surprised by the quality of journalism in this newspaper, because we talk to everyone from different sides of the story. We try to get it right. Make sure to subscribe today. Now, why do we have to go halfway across the world to get this crude oil in Texas? We could get it from Texas and other parts of the country, right?
Well, the challenge that we have for there is twofold. One is that we have no crude oil pipelines that run from Texas into California. We have some product pipelines that run from Texas into Arizona, but you can't, with the exception of one pipeline that I know of in the world, crude pipelines and product pipelines are different pipelines.
Product is like gasoline,
jet
fuel,
diesel,
and those things. Okay.
And the you just need to keep those lines clean of the debris and the contaminants that you find in crude oil, like sand and salt and sulfur and acids and heavy metals, because you don't want those getting into the finished products. So it's very difficult to run, but we don't even have a pipeline that comes all the way to California. That's the first issue. The second one is that even if you did have a pipeline, or even if you started to build rail facilities and you had the ability to rail crude from Texas, it's a different kind of crude oil. Most of the crude oil production in West Texas is a very light, sweet crude oil, and the refineries in California are designed to run a heavy sour crude oil. They were designed to run the crude oil that's produced in the San Joaquin Valley. That's why California refineries look the way they do. They were designed to meet that crude, and it's a difficult crude to refine, and that's what gives those California refineries an advantage, is that they have the ability to refine a difficult-to-process crude, and they've been configured that way. You just can't substitute a West Texas crude into that refinery and expect to get the same profile of finished products out for consumers, because the internal workings of the refinery will be different, and you won't be able to run as much crude. So there's really two issues. It's we don't have the logistics to connect Texas to California, and it's not the kind of crude oil that the California refineries are the optimal crudes for California refiners to run. And that forces those California refiners, if they're not going to get it from California, they then have to look for heavy sour crudes or heavy crudes elsewhere in the world, which is going to be either Latin America or the Middle East.
You mentioned this is a matter of national security, and there is not enough oil in these pipelines, and these pipelines are connecting oil fields with refineries. Do you think there is a potential for certain parts of this industry in California to shut down if we continue in the same rate we're going? Or do you think what we did is going to help significantly to not shut it down?
If our legislators and our governor see the urgency, they have the ability to fix it.
And what do they need to do to fix it?
They need to get rid of the setbacks. They need to get rid of some of the CARB regulations. They need to allow permits in the other counties. And we need to get away from our dependence on foreign gas and diesel.
There is the need for great urgency at this point. This might be a little take a breath time. All right, we did something. 237 is a good step. It's a positive step in the right direction, but it's not the solution. It's one part of a much larger solution. We need to look at these agencies that regulate and their powers and understand, what the limits of those powers should be, not what they are today, but what they should be. Then we need to look at ways of increasing the environment to make it more hospitable for the producers and the refiners to operate here. Because lurking in the background, at least in my mind, is Andy Waltz, who's the president at Chevron, who said, look, California is playing a very dangerous game. The question is, why should we stay in California?
So, kind of to his point, right now, from the wellhead to the tank, to the pipeline, to the refinery, we put out the cleanest oil and gas in the world. We are regulated by the Air Resources Board for any organic compounds coming out of the into the atmosphere, you get fined. I'm telling you, we put out the cleanest oil and gas. And then, then on top of that, we have what's called cap and trade. We're spending money on, and I'm an oil and gas guy, but I'm also about new technology. We're spending money on a high-speed rail. We just passed a bill last week. I didn't. I voted no. They passed a bill to allow $1 billion a year from cap and trade to go into the high-speed rail. Wrong. I'm changing the direction of our conversation here a little bit, but I wanted to tell you, we talk about emissions and CO2 emissions and CO2 emissions. All we have to do, if you want CO2 sequestration, this is real simple. Drill for oil and gas, build critical infrastructure for water, have water feed crops which sequester CO2, and you have a complete life cycle in your, but they want to spend $1 billion a year on a high-speed rail to nowhere. So forgive I got off track a little bit, but we're spending our time and resources in the wrong direction. We need to spend our time and resources on advocating for more of our own natural resources, i.e. oil and gas. We should spend $1 billion a year, maybe not $1 billion, but we should spend some money on fusion, micronuclear, and hydrogen if you want to go the clean route. So there's other options in the high-speed rail. I just wanted to bring that point up.
So you think that the state has picked a philosophy that may not work?
They picked the philosophy that oil is dirty. There's oil in 6,000 products. There's oil in makeup. There's derivatives of oil and gas in your toothpaste. I mean, it just goes on and on. So the ideology that oil is dirty is wrong, and it's a matter of national security, and it's going to catch up to us real soon.
What about this industry itself? There is a reason why this industry is here. Like, why is there so much negativity about oil and gas in California?
This industry is 8%, as I've said, 8% of California GDP, but it's the first 8% of California GDP.
Exactly right.
If you don't get the first 8%, you're not getting the other 92.
Can you explain that?
Well, petroleum are in 6,000 products. They propel flight. We don't use renewable fuel, and we don't use solar power to keep a 380 Airbus in the sky. That is aviation fuel. When you look at a truck, that's diesel fuel. Most of the cars, over 70% of the cars on the road, are internal combustion engine cars. This economy runs on oil and gas. And yes, we're looking for a transition at a certain point. But to superimpose a date of 2035 was just picked out of the sky. It was just a fairyland date. And it disrupted the markets. And the markets are this very, very intricate structure of refiners and producers and pipelines and the retail distributor.
What can Californians do about this? Like, people that are watching this, they want a clean air. At the same time, they don't want higher gas prices.
There's always a balance between one variable versus another when it comes to environmental quality and so-called greenhouse gas emissions. I'm not sold. Again, if you look at oil and gas production and refining and pipeline, it doesn't put out any emissions. The emissions come from the tailpipe. So don't blame the oil and gas industry for your way of life. There is a balance, but you don't do it all at once. You transcend into solar and wind and hydrogen and fusion and micronuclear for a portion, and you just don't do it all at once. It's not a 2035, we're going to be all clean. It ain't going to happen. We need to be pragmatic about it, and we need to realize where we can, again, I come back to instead of spending $1 billion on high-speed rail, why don't we spend it on futuristic energy sources?
I would agree with that. If you think about it, you can't mandate this. And so what the governor tried to do back in 2020 was mandate 2035 as sort of the date to drop dead on the internal combustion engine, and that set off a bunch of alarms in the industry. What California has not had, and they'll say they have it, but when you read it and if you apply sort of the MBA grading sheet to it as to their plan, they don't really have a plan. All right, it's maybe a C- at best, and that not going to get you through an MBA program. So what we need is a comprehensive plan and one that's realistic, one that actually understands that we're going to bring down the consumption of fossil fuels in a reasonable, realistic rate while we're bringing up these new technologies, and there's a scale-up period for that. It's not 2035. It's probably more like 2055, 2065 type period, if indeed you invest the $1 billion a year in proper technologies.
Assemblymember Stan Ellis, it was great to have you on California Insider. Professor Michael Mische, it was great to have you.
Thank you.
Thank you very much. Our pleasure.
Loved it.
Let us know what you think of the situations with the pipelines. Do you think these 2,000 wells is going to be enough? What are your thoughts? You can always comment and email us. Email us at siamak@californiainsider.com. We read all of your emails and comments. But make sure to consider others when you write these comments. We want to make sure everybody is engaged in the discussion that we have. I'm Siamak Karami. This is California Insider, and we'll see you next time.